Welcome back to XRP On Moon, the channel where we break down the biggest XRP developments, hidden signals, and market-moving insights that most people completely miss. Today's update is something you absolutely cannot ignore, because what's happening around XRP right now is not just another price movement, it's not just another rumor, and it's definitely not something the average investor fully understands yet. This could be one of those rare moments in crypto where everything starts aligning behind the scenes, and if you blink, you might miss it. The idea of XRP making a 1371X move sounds insane at first, almost impossible, something that critics would laugh at instantly. But here's the truth. In crypto, what sounds crazy today often becomes reality tomorrow, and the early signals are usually hidden in plain sight. Right now, the conversation around XRP is shifting in a very subtle but powerful way. For years, XRP has been one of the most controversial assets in the entire crypto market. It has faced legal battles, regulatory pressure, and constant skepticism from both traditional finance and even parts of the crypto community. But despite all of that, XRP has managed to survive, stay relevant, and most importantly, build infrastructure that most other cryptocurrencies still don't have. And this is where things start to get interesting. Because while retail investors have been distracted by price charts and short-term volatility, institutions have been quietly watching, analyzing, and in some cases, positioning themselves. Now let's talk about the number that caught everyone's attention, 1371X. This isn't just a random figure thrown around for hype. When people mention a potential move like this, they're usually referring to a combination of factors: market cap expansion, real-world adoption, liquidity demand, and global financial integration. XRP is not trying to be just another cryptocurrency. It's designed to be a bridge asset, something that facilitates cross-border payments instantly, efficiently, and at scale. If that vision actually materializes at a global level, the demand for XRP wouldn't just increase, it would explode. Think about the current financial system for a moment. Cross-border transactions today are slow, expensive, and heavily reliant on intermediaries. Banks have to pre-fund accounts in different countries, which locks up billions of dollars in liquidity. This is where XRP's utility becomes extremely powerful. By acting as a bridge currency, XRP can eliminate the need for pre-funded accounts, freeing up massive amounts of capital. Now imagine this happening not in one or two corridors, but across dozens of major financial routes worldwide. The scale of that transformation is almost hard to comprehend. And here's the key point that many people are missing. Utility drives value. Not hype, not speculation, but actual usage. If XRP becomes a core part of global payment infrastructure, then its valuation model changes completely. It's no longer competing with meme coins or speculative tokens. It starts operating in the same conversation as global liquidity systems, and that's where exponential growth scenarios begin to enter the discussion. At the same time, we are seeing subtle signs that the narrative is changing. More institutions are exploring blockchain solutions. Governments are becoming more open to digital assets, especially those that can integrate with existing financial systems. And XRP sits in a very unique position in this landscape. It's fast, scalable, and already connected to a network of financial partners. These are not theoretical advantages. They are practical, real-world capabilities that are already being tested and implemented. But here's where things get even more intriguing. The market hasn't fully priced this in yet. Most retail investors are still focused on short-term gains, quick flips, and daily price action. They're not looking at the bigger picture, the long-term infrastructure play that XRP represents. And historically, the biggest opportunities in crypto have always come when the majority is looking in the wrong direction. So when you hear something like 1371X, don't immediately dismiss it. Instead, ask yourself, what would need to happen for something like that to even be possible? Because once you start connecting the dots, global payments, institutional adoption, liquidity demand, you begin to see that this isn't just about price speculation. It's about a potential shift in how value moves across the world. And if that shift is already beginning, then the real question isn't whether XRP can move, it's whether people will recognize the opportunity before it's too late. When you start digging deeper into what could actually drive a move as extreme as 1371X, you quickly realize that this is not about a simple bull run or a temporary surge fueled by retail hype. This is about structural change in the financial system, and more importantly, XRP's positioning within that system. Because unlike most cryptocurrencies that rely heavily on community momentum and speculative cycles, XRP's long-term thesis is tied directly to utility, liquidity, and institutional adoption. And right now, the pieces of that puzzle are slowly but surely coming together. One of the most important aspects to understand here is liquidity. In traditional finance, liquidity is everything. Banks, payment providers, and financial institutions need constant access to capital in order to facilitate transactions across borders. The current system requires pre-funded accounts, meaning that trillions of dollars are essentially sitting idle in different countries just to ensure that payments can be processed smoothly. This is not only inefficient, but also incredibly expensive. Now imagine a system where that capital is no longer locked up, where value can be moved instantly without the need for intermediaries. That's exactly the problem XRP is designed to solve. This is where the concept of on-demand liquidity starts to become critical. Instead of holding funds in multiple currencies across different regions, financial institutions can use XRP as a bridge asset. They can convert one currency into XRP, transfer it across the network in seconds, and then convert it into another currency on the other side. This entire process happens almost instantly, reducing costs and eliminating the need for pre-funded accounts. If this model gets adopted at scale, the demand for XRP wouldn't just increase gradually. It would increase exponentially because XRP would be actively used in real transactions, not just traded on exchanges. Now think about what happens when multiple financial institutions start using this system simultaneously. The volume of transactions flowing through XRP could reach levels that the current market isn't even close to pricing in. And this is where the idea of a massive price expansion starts to make more sense, because the value of XRP in that scenario is directly tied to how much liquidity it needs to handle. The more value flowing through the network, the higher the demand for the asset itself. But here's the part that most people overlook: timing. Just because the technology exists doesn't mean it gets adopted overnight. Institutional adoption moves slowly, carefully, and often behind closed doors. Deals are negotiated quietly, systems are tested extensively, and only when everything is ready does it become visible to the public. This means that by the time the average investor starts hearing about widespread adoption, a lot of the groundwork has already been laid, and if you look closely, there are signs that this groundwork is already in progress. Partnerships, pilot programs, and integrations are happening in the background. Financial institutions are exploring blockchain solutions not just as an experiment, but as a necessity. The pressure to modernize the financial system is increasing, especially as global transactions continue to grow in volume and complexity. XRP, with its speed and efficiency, becomes a very attractive option in this environment. Another factor that could play a major role here is regulatory clarity. For years, uncertainty around regulations has been one of the biggest barriers to institutional involvement in crypto. But as governments begin to define clearer frameworks, the risk associated with digital assets decreases significantly. And when that happens, institutions that were previously hesitant may start to enter the space more aggressively. XRP, being one of the most discussed assets in terms of regulation, could actually benefit from this shift more than most. Now, combine all of these elements: increased liquidity demand, institutional adoption, regulatory clarity, and global financial integration, and you start to see a scenario where XRP is no longer just another cryptocurrency. It becomes infrastructure, and infrastructure assets behave very differently in terms of valuation. They are not driven purely by speculation, but by usage, necessity, and scale. This is why the idea of a 13 sudden 5-in-1x move, while still extreme, cannot be dismissed outright. Because if XRP transitions from a speculative asset to a core component of global finance, its value proposition changes completely. It's no longer about market cycles. It's about how much of the world's financial activity flows through it. And the real question now is not whether the technology works or whether the use case is valid. The real question is how quickly this transition can happen and who will be positioned early enough to benefit from it. As we move deeper into this discussion, it becomes clear that one of the biggest catalysts for XRP's potential explosive growth is something that most retail investors still underestimate, the power of global financial alignment. Because for XRP to even approach a scenario where a 13.7-to-1x move becomes remotely possible, it's not just about adoption in one region or by a handful of institutions. It's about a synchronized shift across multiple layers of the financial system, and that shift may already be quietly unfolding. Right now, central banks around the world are actively exploring and developing digital currencies. These are often referred to as CBDCs, and they represent a fundamental evolution of money itself. Countries are no longer just experimenting for the sake of innovation. They are preparing for a future where digital transactions dominate global finance. But here's where things get interesting. These digital currencies still need interoperability. They need a way to communicate, exchange value, and settle transactions across borders efficiently. And this is where XRP's role becomes incredibly important. Unlike many blockchain projects that operate in isolated ecosystems, XRP was designed with interoperability in mind from the very beginning. It's not trying to replace existing financial systems. It's trying to connect them. That distinction is critical because financial institutions are far more likely to adopt solutions that integrate with their current infrastructure rather than completely disrupt it overnight. XRP offers that bridge, that middle layer that allows different systems to interact seamlessly without friction. Now imagine a scenario where multiple central banks launch their own digital currencies, but they all require a neutral, fast, and scalable bridge asset to facilitate cross-border transactions. In that environment, XRP doesn't just become useful, it becomes essential. And when an asset becomes essential to global financial operations, its demand is no longer driven by speculation. It becomes a requirement for the system to function. Another key element that could amplify this effect is the increasing demand for real-time settlement. In today's world, speed matters more than ever. Businesses, governments, and financial institutions cannot afford delays in moving capital. The traditional system, with its multiple intermediaries and settlement delays, simply cannot keep up with the demands of a rapidly evolving global economy. XRP, with its near-instant transaction capabilities, directly addresses this problem. It provides a solution that is not only faster, but also significantly more cost-effective. But here's where things take another turn. The supply side of XRP plays a crucial role in this entire equation. Unlike fiat currencies that can be printed indefinitely, XRP has a fixed supply. This means that as demand increases, especially from institutional usage, the available supply on the open market could become increasingly limited, and when you combine high demand with limited supply, you create the conditions for significant price expansion. This is a fundamental economic principle, yet many investors overlook it when analyzing XRP. They focus on current price levels without considering what happens when large-scale adoption begins to absorb available liquidity. Institutions don't think in terms of small purchases. They require massive amounts of liquidity to operate efficiently. If even a fraction of global payment flows start using XRP, the pressure on supply could be immense. At the same time, there's another layer to this story that often goes unnoticed: market psychology. When an asset begins to show strong upward momentum, especially driven by real utility, it attracts attention. That attention brings in more investors, which increases demand even further. This creates a feedback loop where price growth fuels interest, and interest fuels further growth. We've seen this pattern play out in previous crypto cycles, but usually driven by hype. Now imagine that same dynamic being driven by actual usage and institutional demand. And this is where the narrative starts to shift from impossible to unlikely but plausible under the right conditions. Because a 1371X move doesn't happen in isolation. It requires a convergence of factors: technological adoption, regulatory clarity, institutional involvement, and global financial integration. Each of these elements on its own is powerful, but together they create a scenario that could fundamentally reshape how XRP is valued. The key takeaway here is that we are potentially looking at the early stages of something much bigger than a typical market cycle. This is not just about price targets or short-term gains. It's about the evolution of financial infrastructure and XRP's potential role within it. And if that role continues to expand, then the ceiling for its valuation may be far higher than most people are currently willing to consider. Now, the most important part of this entire discussion comes down to triggers, the specific events that could flip the switch and accelerate XRP's trajectory faster than most people are prepared for. Because up until now, everything we've discussed, institutional adoption, global liquidity demand, CBDC interoperability, has been building in the background. But markets don't move on potential alone. They move when catalysts force participants to react, and in XRP's case, there are several powerful triggers that could ignite that reaction almost instantly. The first major trigger is regulatory clarity. For years, uncertainty has acted like a ceiling on XRP's growth. Large institutions, hedge funds, and banks have been watching from the sidelines, not because they don't see the potential, but because they operate within strict legal frameworks. They cannot afford to take risks on assets that may face regulatory challenges. The moment that uncertainty is removed, or at least significantly reduced, it opens the floodgates for institutional capital. And when institutional money enters a market, it doesn't move slowly. It moves with size, with strategy, and with long-term intent. This is where things can escalate quickly. Because institutions don't think in terms of buying a few $1 million worth of an asset. They think in terms of billions. They allocate capital in a way that aligns with long-term infrastructure plays, and if XRP positions itself as a core component of global finance, then it becomes a strategic asset rather than a speculative one. That shift alone could redefine how XRP is priced in the market. The second trigger is large-scale partnerships and integrations. While there have already been partnerships in the past, what the market is really waiting for is confirmation of deep system-level integration. Not just pilot programs or small corridors, but full-scale adoption where XRP is actively being used in high-volume financial flows. The moment news breaks that major financial networks are relying on XRP for real transactions at scale, the narrative changes overnight. It goes from potential use case to proven infrastructure. And here's the thing, by the time this becomes public knowledge, it may already be too late for early positioning. Because markets tend to price in information extremely fast once it becomes widely known. This is why understanding the signals before they become headlines is so critical. The biggest moves don't happen when everyone is aware. They happen when only a few are paying attention. Another powerful trigger could come from liquidity shocks. If demand for XRP suddenly increases due to institutional usage, while the available supply on exchanges continues to shrink, it creates a supply squeeze. In simple terms, there aren't enough sellers to meet the demand. And when that happens, price doesn't move gradually. It jumps. These kinds of moves can be aggressive, fast, and completely unexpected for those who are not already positioned. At the same time, macroeconomic conditions could also play a role. The global financial system is under constant pressure to become more efficient, more transparent, and more adaptable to a digital-first world. Economic instability, currency fluctuations, and increasing cross-border trade all create an environment where solutions like XRP become more attractive. When traditional systems start to show limitations, alternative solutions gain traction much faster. But perhaps the most underestimated trigger of all is momentum itself. Once XRP begins to move with strong conviction, once it breaks key psychological and technical levels, it starts attracting attention from traders, investors, and institutions alike. This creates a chain reaction. More buyers enter the market, liquidity increases, and the asset gains visibility across the entire crypto space. Suddenly, XRP is no longer being ignored. It becomes the center of attention, and we've seen this before in crypto history. Assets that were once overlooked suddenly explode into the spotlight, driven by a combination of fundamentals and momentum. The difference here is that XRP's fundamentals are tied to real-world financial infrastructure, not just market hype. That makes its potential trajectory far more impactful if everything aligns correctly. Now, when you combine all these triggers, regulatory clarity, institutional entry, real-world adoption, liquidity dynamics, and market momentum, you start to see how quickly things could escalate. What looks like a slow build today could turn into rapid acceleration tomorrow. And in markets, timing is everything. Being early often feels uncomfortable, uncertain, even risky, but being late usually means missing the majority of the move. So the idea of a 1371X move is not about predicting an exact number. It's about understanding the scale of what could happen if all these triggers activate within a relatively short period. Because when multiple catalysts align at once, markets don't move in a straight line, they move exponentially. So now we arrive at the most important part of this entire conversation. What does all of this actually mean for you as someone watching XRP right now? Because after breaking down the possibility of a 1371X scenario, the infrastructure narrative, institutional positioning, liquidity dynamics, and the potential triggers that could ignite everything, it all comes down to perspective. Not hype, not emotion, but how you interpret the opportunity in front of you. The reality is markets reward those who understand before the majority reacts. And XRP is one of those assets that has spent years being misunderstood, criticized, and often overlooked. But at the same time, it has continued building, integrating, and positioning itself within a very specific niche, global value transfer. This isn't about competing with every cryptocurrency in existence. It's about dominating a particular function in the financial system. And if that function becomes critical, then XRP's role becomes extremely valuable. Now, here's where you need to think differently from the average retail investor. Most people enter the market chasing confirmation. They wait until the headlines are everywhere, until the price has already moved significantly, and until the narrative feels safe. But by that point, a large portion of the opportunity is usually gone. The early phase, the accumulation phase, is where the biggest asymmetry exists. High uncertainty, but also high potential upside. That doesn't mean blindly believing in extreme projections like 1371X. It means understanding the conditions required for such a move and evaluating whether those conditions are gradually forming. It's about connecting the dots between real-world adoption, financial system evolution, and XRP's utility within that system. Because if those dots continue to connect, then even if the exact number is unrealistic, the direction of the move could still be significant. Another key factor you need to consider is time horizon. Transformations of this scale do not happen overnight. Even if all the pieces are in place, the transition from traditional systems to blockchain-based solutions will take time. There will be volatility, setbacks, and periods where nothing seems to be happening. This is where patience becomes one of the most valuable assets an investor can have, because the market often tests conviction before rewarding it. At the same time, risk management is critical. No matter how strong a narrative may seem, no asset is guaranteed to succeed. The crypto market is unpredictable, and external factors can always influence outcomes. This is why it's important to approach opportunities like XRP with a balanced mindset, recognizing the potential upside, but also being fully aware of the risks involved. Now let's address the psychological aspect. When you hear numbers like 1371x, it can trigger excitement, disbelief, or even skepticism. And that's completely normal. But instead of focusing on the number itself, focus on the underlying story, because the number is just a projection. The real value lies in understanding the mechanism that could drive growth. If you understand the mechanism, you're in a much stronger position to make informed decisions. And here's something else to keep in mind. The opportunities like this don't stay hidden forever. If XRP starts gaining real traction at a global level, the entire market will eventually take notice. Media coverage will increase. Institutional interest will become more visible, and retail participation will follow. At that point, the narrative will shift from doubt to belief. And historically, that's when markets become the most crowded. So the question is simple but powerful. Do you want to be early when things are still uncertain and undervalued? Or do you want to wait until everything is confirmed and widely accepted? There's no right or wrong answer, but there is a difference in outcome. As we wrap this up, one thing is clear. XRP is at a very interesting nook in its journey. The foundation has been built, the use cases defined, and the global financial landscape is evolving in a way that could support its growth. Whether or not it reaches extreme projections like 1371x is something no one can guarantee. But the potential for significant impact is there, and it's something that cannot be ignored. Financial disclaimer. This content is for informational and educational purposes only and should not be considered financial advice. Cryptocurrency investments carry significant risk and volatility, and you should always do your own research before making any investment decisions. Never invest more than you can afford to lose, and consider consulting with a professional financial advisor before entering the market.